Hello everyone. Today we are going to discuss exempted incomes, that is, which do not form a part of income. Now let's get started. Section 10, subsection 1, agricultural income. Agricultural income is the income which is not taxable, that is, it is exempted from income tax. See here, agricultural income does not taxable as per IT Act 1961. So according to Income Tax Act, it is not taxable. Rule 7 and explanation 3. In this, we are going to see what kind of incomes are treated as agricultural incomes. Now let us see section 2, subsection 1A says that income from nursery would be deemed to be agricultural income whether or not the basic operations were carried out on land. See, this section says that if we derive any income from nursery also, it is deemed to be derived as if it is an income from agriculture. And we need to verify that whether basic operations relating to agriculture were being carried out or not. Next, income from manufacture of rubber. In this rule is Rule 7A. So under this, we are going to see it now. 35% is taxable as it is for business purpose, and 65% is exempted as it is treated as agricultural income. See, if you manufacture rubber, then if you are doing business with it, then only 35% of your production is taxable, because only 35%, only a part of it is used for trading, and that is the reason why it is taxable of 35%, and remaining 65% is exempted from tax, because remaining 65% is treated as agricultural income. Then next one, the income from manufacture of coffee. Then what about coffee? This one we will study under Rule 7B. See here, 40% is taxable because 40% of the production is used for business purpose. So 40% is taxable and remaining 60% is exempted because we treat this as agricultural income. Then next, income from growing and manufacturing of tea. Rule 8. Now see what's there in it. It is also the same. 40% is taxable because it is for business purpose, and 60% is exempted as it is for agricultural income, exempted from tax. Next, income derived from sale of coffee grown and manufactured in India. This is under Rule 7B, Sub Rule 1. See here, 25% is taxable as it is for business purpose, and 75% is exempted as it is from agricultural purpose. Then, till now we have studied section 10, subsection 1. It is completely related to agricultural income, and we have also studied what kind of incomes are treated under agriculture. And now going to section 10, subsection 2. Let's see what is there in it. See here, section 10, subsection 2. Under this we are going to see whether income derived under this is whether taxable or whether it is exempted from taxable. And of course we know we are studying incomes which are not forming a part of an income. So this is also that kind of income which is not forming a part of income. Okay. Next, it says amount out of the family income. So the section is talking about income derived in a family. Now let us see. In case of a impartial estate, the amount received out of the income of a family estate, be any member of such HUF, is exempt from tax. See, the meaning of this is if a person is deriving any income, in case if he is in Hindu undivided family, then that income is exempted from tax. See, next, section 10, subsection 2A. This is saying that According to this section, share of profit received by a partner from a firm, it is not applicable to the interest on capital and remuneration received by the partner from the LLP or firm. See here a partner will receive remuneration from a partnership firm, and after receiving from the partnership firm, it is not taxable in the hands of the partner. It is taxable before the uh, remunerating the partner. That means it is taxable only when it is in the hands of a partnership firm, and after paying the tax itself, the partner is entitled to receive the remuneration. And next, he is not entitled to pay the tax in any form. See, there is one trick to remember these two sections. Anyway, first 10 subsection 1 deals with agricultural income, and next two sections, it's an easy way to remember. We all know what is meant by person. Section 10 2 and section 10 subsection 2a, these both deals with persons itself. So in section 2 it consists of HUF. In subsection 2a it consists of firm or LLP. So in this way you can remember section 10 subsection 2, if a person is earning income when he is in Hindu undivided family, then the income is exempted from tax. Then next, section 10 subsection 2a deals with income derived by a partner in a firm or LLP. It is also exempted from tax. In this way you need to remember. Then we shall section 10 subsection 5, leave travel allowance. It deals with leave travel allowance. It means when you travel, when you are in employment, then you will get leave travel allowance and it is not going to be taxed. Section 10, subsection 6. It deals with remuneration received by individuals who are not citizens of India. Then section 10, subsection 7 deals with allowances or perquisites to government employees who are outside India. See, there is one trick here. A simple trick is here to remember these things. First thing is, these are in sequence. That is 10, subsection 5, 6 and 7. These are in sequence. So first one is, we all know that 10 is the section for exempted incomes. And here, you can remember easily. 5 with leave travel allowance, and we all know that 6 is for residential status in income tax. Section 6 is for residential status. So that the same we can apply here. If you observe here, remuneration received by individuals who are not the citizens of India. Who are not the citizens of India. This sentence implies that his residential status of a citizen. So based on this, we can remember that section 10 subsection 6 deals with remuneration is received by individuals who are not citizens of India, and section 10 subsection 7 also that deals with same thing, allowances or perquisites to government employees who are outside India. See, government employees outside India, it implies the residential status of a citizens, whether they are in or whether they are outside the India. So based on these things, you can remember these three sections. Section 10, subsection 5. Section 10, subsection 6. Section 10, subsection 7. Then we move on to next section. Section 10, subsection BC. Again, we have entered into 10, subsection BC. In subsection, we are finding only alphabets and not numbers. Now let's see what is it. Compensation on account of any disaster. If any disaster happens, then we will get some compensation. For example, last year there are very heavy rains incurred and most of the houses got collapsed. Due to that, government has compensated with some amount, and that amount is not taxable because it comes under section 10 subsection BC. Compensation on account of any disaster. Now we move on to next. Now we move on to next section. That is section 10 subsection 10C. We can study payment at the time of voluntary retirement. So C is for compensation, and that compensation is done in the payment at the time of voluntary retirement. Then we go on to next slide. Section 10, subsection 11. It deals with payment from provident fund. If you have any provident fund, then it is also exempted. Section 10, subsection 12A. This is NPS, payment from NPS, National Pension Scheme, trust to an employee. If an employee salary is deducted to NPS, that would be a saving of an employee, and that is not going to be taxable. Section 10, subsection 12B. The amount of withdrawal should not exceed 25% of the total contribution made by the employees in NPS. Here, if the employee wants to withdraw the entire amount from NPS contribution, then he can withdraw only up to 25%. He cannot withdraw the entire amount. Then, section 10, subsection 14. Allowances for meeting business expenditure. See, 14 deals with subsection 14 deals with allowances for meeting business expenditure. And section 10, subsection 15 deals with interest incomes. See here, section 10, 11 and 12 deals with employees' contributions. 11 is for PF, Provident Fund, and 12A is for payment from NPS. This is a contribution which is made by an employee to the employer. So these are the benefits which are going to obtain to an employee. And 12B, this is also relating to NPS scheme itself, but only thing is, if he want to withdraw the fund from NPS contribution, then he could not exceed the limit of 25%. Then there is no section called 13, subsection called 13. Then immediately he has given section 10, subsection 14. It deals with an allowances of meeting business expenditure. Section 10, subsection 15, interest incomes. These are also not taxable under Income Tax Act 1961. Thank you for watching. Please like, share and subscribe the channel. So these are the continuation of previous class, and the links of the previous class are given in the description box. Thank you for watching.